Alrighty, looks like we are live. Welcome to another Properties and Beers. Now, you're not going to believe this. We just received more racist comments on our property ads. And yes, it happened again. Crazy, right? Some people just can't handle the idea that everyday Aussies, people like you and me, are actually building their future through property. And I'll read out some of them that came up. Like, go to another country. Australia needs homes for family, not for investment. Right? Here's another one, right? What are you doing selling our country's property? You don't look like you come from Australia. Pardon me, but hey, go back more than 400 years ago. Anyway, just saying, F off, you dirty effing C-U-N-C word. Get out of here. Just saying what this is actually the comments, right? It's frustrating, honestly, but sometimes shocking. And it's something that we can't ignore as investors solving a real world problem, right? Now, before we get into it, some of you may have seen me recently on Sunrise, not for property this time, but for my Transformers collection. That's my first time on live TV. Anything could have happened, right? So it got me thinking. There's actually a line from Transformers I've always liked, right? And it's kind of adapted over time. Financial freedom is a right of all sentient beings. I don't know if you guys can see that. I love this quote, and I print this up, and it's on my desk. I believe financial freedom is the right of all sentient beings. Now, it might sound a bit dramatic coming from a bunch of robots, but when you think about it, that's actually what we're working towards here, right? Financial freedom is the right of, everyone that lives here. Not an expectation, but a right. I want to be really clear here. It's not, financial freedom's got to be earned, but it's actually the right? We should all be given the right for financial freedom. That's my honest belief. And for those that are new here, by the way, before we start, my name is Gaurav Gupta, CEO and founder of Ethical Property Investments. We work with everyday Aussies, Australians, citizens with jobs, families, responsibilities, regardless of their ancestry, the color of their skin, helping them build property portfolios that are strong, steady, and actually support their lives along the way. The focus has always been on high cash flow properties that serve a real purpose to the community while still performing financially over time. And today, I want to take you over three key things. Number one, how racism and misinterpretations and misperceptions really shape what people think about investors. Number two, why markets move in cycles and what the numbers could really tell us about resilience. And number three, how potential tax changes could impact your portfolio and what you can do about it. So grab your beer, tea, whatever you're sipping, let's get into it. And you might be asking the magical question, Goro, what are you having tonight? Well, let's get started. I am having lemon and passion fruit 196. I know you guys know if you watched me before, I love a good 196. Suntory do a fantastic vodka soju and soda, 6%, zero sugar, and totally delicious. So let's get some of this into it. I'm watching it. Oh, almost poured too much in there without paying attention. So if you're watching, come say hi. Right. So let's cheers, guys. Delicious. I'm not going to lie. I've had this before once last weekend. I liked it so much. I had to get it again. It was delicious. So let's chat about racism, misconceptions, and the immigrant investor mindset. Right. So there's some interesting things that happen with our ads, right? We've been promoting replay of our recent co-living webinar, and some of the comments we got, let's just say they were downright ugly. Some were racist, some were hateful, and some were just plain shocking, right? And comments like, go to another country. Australia needs homes for family, not for investment. Hello, how do you think you get into family homes, right? Or what are you doing selling our country's property? You don't look like you're from here, Australia, says someone. Let me know, got started. And there's one, by the way, the first comment was from the person who did the racist comment last couple of weeks ago. And the third one, the worst one was, F off, you dirty effing Indian C word. Get out of here. What's funny is that last comment actually came from a builder. In today's property market, I bet half his clients are Australian Indians. The Indian Australians, what do you want to call them, right? Aussies that are of Indian heritage. Crazy, right? Now, those hateful, racist comments, yeah, it happens. And honestly, it's kind of disheartening, but it also shows a bigger point. People often misdirect their frustration. So they see property investors, they assume we're talking, when people see property investors, especially if your name your online name starts with purple. I'm not going to say anything anyway. That's a controversial topic for another day. When they see properties investors, they assume that we're taking something away rather than understanding what's really happening. And the reality is, most investors, including immigrants, have worked hard, saved, followed the rules. They're not exploiting the system. We're talking about everyday Aussies trying to secure a future, build a home, and sometimes build a portfolio ethically, right? These are people who usually have come to this country with not very much, and through long-term planning, patience, have built the portfolios that actually support the communities that create housing opportunities rather than take them away. And by the way, if people do come to the country with some money and really inject it into the economy, they get asked the question, hey, you didn't earn tax on that. So which one is it? Would you like them to earn more money here, or would you like them to bring wealth into the country? Which one is it? You can't have both, right? I see this dichotomy all the time on some of these online forums. Now, most of the anger may not be personal. It's honestly, I think there's a bit of misdirection there. A lot of it comes from media narratives. The foreign buyer government grants, headlines that make it easier to blame individuals. That doesn't really solve anything, right? The real issues, in my belief, are supply constraints, policy gaps, rising demand. And it's easy to vent at a visual person that looks different to you on a post than to tackle the structural issues that actually create housing pressure, right? Here's the thing, right? You're not the villain in the story, even if some people online want to paint you that way. And look, I'm saying this because I'm also an investor, or because, my business is about helping investors. I'm not just saying it because of that. I believe that investors are part of a system that can actually help communities do the right thing. And and once you start looking at property as something that could actually help the community, you tend to operate with confidence instead of getting caught up in someone else's bullshit and misunderstanding, right? And most people, sorry, I'm getting so excited, the table's moving, right? And you know what? I believe you can operate with confidence instead of getting caught in someone else's misunderstanding, right? There's something that most people overlook, and that's the mindset behind how immigrant investors approach property. When I was growing up, I was working for a company that taught about wealth creation, and the stats were immigrants were 5 times more likely to become millionaires than people who'd been living here for 2-3 generations. It's not because they magically came here with a bag of gold and said, "Hey, let's magically become wealthy." It's not how most immigrants come into the country, right? They don't rely on luck. They save their hard-earned money. They research. I've seen this firsthand. That's how my parents got ahead. They started small, often with the first home, and then gradually expanded. They focus on the education. They focus on cash flow, long-term sustainability, and responsible growth, right? So here's my lesson to you, if you're watching, regardless of what color, whether you're immigrant or non-immigrant, whether you've been here for 3, 4, 5, 6 generations, whatever that looks like for you. The lesson here is that even if you weren't born overseas, it's very clear. Discipline, patience, and ethical investing are what create stable, high-performing portfolios, right? And a lot of people go, hey, these people are taking shortcuts, and they take shortcuts. I'm not talking about shortcuts or trying to outsmart anyone, right? In the property market, structured, deliberate steps, building something that lasts and doing it in a way that doesn't harm the community, that, my friends, is what matters the most, right? And by the way, if you're watching, come say hi once again. I need to have another drink. I've been going on a rant. Now we interrupt this with some real talk, right? Not that I haven't been real the whole time. On a property forum recently, there was something about a couple who'd worked hard and saved up to 200K. We're looking at the first homeowner grant for their first property, and then moving it over to an investment property, 1 or 2 years after. Obviously, that's the Aussie dream, right? Well, you know what? The controversial part was when they disclosed that they were about to get their bridging visa, which, mind you, takes between 3 to 7 years of living here, working hard, paying taxes. And the extreme right websites went nuts. They went crazy on this. They mislabeled all this, causing outrage about how a non-citizen gets a first-time buyer's grant while others are going homeless. Look, I get it. And I kind of agree a little bit. Like, it's important to know the truth is always in the middle, right? And I agree. Only if you're a citizen should you get access to first things like first-time buyer grants. No complaints about that whatsoever, right? If you want access to first-time buyer's grant, things that us taxpayers pay for, let's get it on to citizens. Perfect. What my challenge was the vile racism I saw in all these comments directed towards people who look like they weren't from this country. These guys were only probably 2 to 5 years away from citizenship, so they could have qualified. The issue around housing, in my opinion, should be directed at the government, not squarely at the immigrants looking to increase the housing supply. Like, hello, right? All right, I'm going to be a bit frank because I'm seeing this live and happen, and I personally don't believe that it's fair because once again, with this particular situation, they probably earned a little bit of the money overseas and they earned a little, saved a lot here, so they paid taxes here and they brought wealth into the country. I don't see the problem with that because that's what that's what people do want, right? Now, look, I do want to step back a moment, and here's where the bigger picture becomes obvious, right? Housing supply, not individual investors, is what drives affordability issues, right? People talk about individual investors, raising the price of house. That's not what it works. That's not how it works. We have a shortage of housing in this country, right? Now, with that shortage of homes, a growing population, prices, rents naturally rise. Blaming investors, it's like blaming a drop in the ocean for a flood. That's not what, a few drops, a little bit of rain in the ocean doesn't make a flood, right? Policies that encourage ethical development, support first home buyers, or increase construction activity make more impact than anger at someone's investment choices. And the history shows this pattern repeats globally. Which with successful communities, here's the thing, right? Successful communities are often scapegoated rather than understood. Now, for you as an investor, the takeaway should be simple. Focus on your strategy, compliance, ethical growth, and let all that noise wash over you, right? And so the reason why I went on this rant a little bit was I saw people coming to me and they were affected by this, right? And I didn't even bother sharing the last one on my personal Facebook. So, by the way, cheers. Those that are just joining in, by the way, I've got the 196. I can't even chat about something else. So I'm talking about that topic. Now, let's keep at it, right? Let's talk about market cycles and numbers. Let's change it up a bit. If you think every crisis crushes property prices, the numbers actually tell a very different story. Historically, markets have got ups and downs. But yeah, over the long term, they recover and grow. We live in Australia where we see typically very different property markets than what we see in the USA, right? Now, by the way, I was this little side conversation. I was talking to my dad about when we bought property in the USA in 2012. Everyone was like, don't buy property in the USA. It's GFC and this and that, and you're going to have this issue, that issue. You know what? In 3 years, they doubled in value. I'm glad we bought those houses for like 80, 90 grand. And we bought 3 of them because they were severely underpriced. And now, by the way, if we held them, they'd be grown like they'd almost a quadruple in value, right? It's nuts. Look, I'll chat about Hobart, right? It saw 55% in the early 2000s, Brisbane 38%. Even the national average showed 20% of growth in that period in the early 2000s. Yes, there have been dips too. In 2018, some areas actually dropped by 5%. Up, by the way, compared to the stock market, that's just dropped 30%, right? And 2008 saw small drop of 4% in certain small markets. Here's what we're talking about, though, right? You know what happened in 2009? Where national growth jumped by 13%. So it shows that downturns are actually temporary and growth dominates over time. Now, let's be honest. If you bought at the peak in 2008, and would you be really upset that you bought that property by the end of 2009 when your property had gone up by a net 9%? Right? Even if you bought it a quote-unquote the most horrible time, it's grown up, right? And look, when everything feels like it's falling apart out there, property has a funny way of actually holding its ground, literally, right? Dad joke, had to use that there. And look, whether we take the dot-com crash, 9/11 aftermath, national property still grew around 13%. GFC, 2008 to 2009, only saw a minor dip, and the rebound that followed within that next year was amazing. That little virus we had at the start of 2020. Short-term had stocks, regional boom straight after that, particularly in areas with tight supply, right? The lesson, my friends, that property is more stable than many people think. And especially when you focus on fundamentals like location, tenant demand, and cash flow, right? Now, if we look at a time that's similar to now, where we had the Gulf oil crisis period, right? Mid-2000s, from memory, markets grew significantly, as I covered in that time. So, you know what? I wouldn't be making any long-term major decisions based on what's happening in the media cycle now, right? Now, fast forward to recent years, Ukraine, inflation, interest rate rises. It's been a roller coaster, but vacancy rates and that my friends, tells a story, are at historic lows in many regions, some under 1.5%, and rents are still rising double digits every year. Look, whether we like it or not, we have a property undersupply here, right? Even with the high rates, markets have a tight supply hold because the fundamentals are strong. And that's why experienced investors really know to look beyond the headlines and focus on the actual numbers. And look, it's so easy to panic when the news cycles scream doom, but the numbers really lie, right? Property cycles are going to wobble, and the long game shows the resilience, right? Sorry, that's where the property opportunity. Sorry, let me have a drink. That's where the opportunity lies. And yes, I get it, right? Oil crisis, energy costs, ongoing global conflicts, they will feel scary. And it's natural to wonder if these will take the market, right? But here's the reality. I believe experienced investors don't react emotionally. What they do is they step back, they look at cash flow, they look at tenant demand, they look at long-term supply and demand balance, and to position their portfolio to withstand all these shocks instead of just hoping for luck, right? Luck is not a strategy, as they say, right? Every time there's been a crisis, people panic, but the underlying demand for housing, that doesn't disappear. It actually goes up, right? Even during global shocks, we're talking, we've seen many global shocks happen. Rental demand persists, vacancies remain low in high demand areas, and well-positioned properties continue to perform consistently. So look, I get it. Like, there's sometimes a little bit of uncertainty. The recent cycles suggest, the recent cycles are telling us that the world's going to fall apart. This and that. And the stock market just crashed yesterday, et cetera, et cetera. You know what? Disciplined investors who focus on fundamentals, cash flow, and long-term strategy are often the ones that come out ahead. Here's the thing: that numbers, they give you context, but what happens if the rules of the games itself change? Now that, my friends, brings us to government policy and what it means for your portfolio and tenants. And before I get to government policy that got released earlier this week, which the news cycle quickly swallowed up, I'm going to finish this very quickly. I'm going a million miles an hour. Now, did you know the government at the moment is considering changes to investment property tax rules? And it's worth knowing what it could mean for you. Right now, at the moment, investors enjoy perks, right? Like the 50% capital gains tax discount and negative gearing. But these proposals themselves, I believe they are going to reduce the benefits, limit negative gearing to, one or maybe two properties, and really make new purchases less tax effective. A recent survey showed that 60% of the investors, mainly inexperienced investors, might choose to pause buying or even sell existing properties if these changes happen. And 39% of investors surveyed, they indicate they might sell or step back from the market if that 50% discount is reduced. Now, that could reduce rental supply and push rents higher. Mark my words, if you get rid of the capital gains tax discount, if you get rid of negative gearing benefits, that's going to push rents higher. Now, for those of us in the game, it's something that we can prepare for. So for investors, you know what it means? It means that your after-tax returns could shrink. Your borrowing limits might tighten, and you might start looking at other asset classes like stocks to maintain returns. By the way, the stock market's just gone down a little bit. I'm not comparing property versus stocks. I don't pretend to be a financial planner on the internet. I'm not going to be one today. Look, here's the key takeaway. Focus on cash flow positive properties, and it gives you breathing room. And it's really going to protect you against any major shift in policy and ensure your portfolio stays sustainable, right? Make sure your property that you're investing in, you're not just going, hey, I'm going to buy this based on growth. Look at cash flow as a strong balance to your portfolio, right? So you might be thinking, Goro, what's the smart approach here, right? Well, you know what? Number one, the one thing, as I like to say, right? Buy cash flow positive properties, right? The second, by the way, it's not financial advice. I'm not giving you one now, but if you're saying, hey, Goro, what would you do in this situation? Number one thing, I'd buy cash flow positive. But the second is hold on to these grandfathered properties because they're protected under current rules. Number three, be deliberate with your new purchases. So if you factor in the higher costs and lower tax efficiency, you can be deliberate. Okay, what do I want? I want something that earns, 8, 9, 10, 12%. Because the policy change is about planning, being prepared and keeping your returns steady despite any potential changes that could happen, right? And those that are renting out properties, my investor friends, this could mean that rents rise simply because of tightening. We're not talking about greed, but really more a tightening of the market. Now, by maintaining cash flow positive assets, you protect your portfolio and tenants simultaneously. It keeps your property sustainable, allows you to manage risk, and ensure your long-term stability in a shifting environment. Look, here's the thing. Whether it's the hate comments, the market swings, or the government mucking around with their tax rules, the answer's always the same. Know your numbers and have a plan. Now, if you step back and look at everything we talked about today, a few things really stand out. Racism and misconception can distort how people see investors. It's frustrating, but it's real. And that's why we need to focus on facts rather than data and opinions. And the other thing is market moves in cycles, right? There are ups, there are going to be downs. But if you look closely at the numbers, resilience in the market, in the property market in Australia shows up time and time again. It's not always obvious from the headlines, but hey, it's the truth. The long-term story is actually there. And the government policies, they change the rules on returns that could affect rental supply, and that can feel concerning. But if you prepare well, sorry, someone's trying to call me, right? But here's the thing, right? If you prepare well, then you prepare your strategy, and knowing what you hold already really keeps you heading. You don't have to be reactive. You can actually be proactive in how you navigate these shifts. And one thing I'd suggest taking away from today is that to keep your focus on fundamentals that actually matters. Look at the numbers, understand the cycles, and plan for the change in policy, right? That's where you get to protect your portfolio, make better quality decisions, and stay ahead, even when the headlines are feeling chaotic or misleading. So, before we wrap up, I want to flag something important. Some of you might not have followed our page yet. That means you're missing on conversations we've had every week around property strategy and more. So check out Ethical Property Investments on Facebook and Instagram. And before I let you go, if you do see me featured again, just a heads up, it might not be for property. It just might be checking in whether this dude is still paying rent on time. So far, he's no issues. He's a solid tenant, but he's pretty good. Like, he does a great job, right? So stick with us. There's a lot more we're going to unpack in the weeks ahead. Thanks for watching Properties and Beers, and I'll see you next time. See you guys later. Cheers.